Hello, and welcome to an overview of Wisconsin's pass-through withholding. Here's a withholding example you're probably familiar with. Chances are you work for an employer who withholds money from your paycheck for your federal and state taxes. Then, after year ends, your employer gives you a W-2 form telling you how much you had withheld. You use this to figure out your tax refund or balance due. Most folks prefer amounts taken regularly through the year, rather than face a large, hard-to-pay balance at year end. Having employer payroll withholding minimizes the likelihood that financial hardship occurs. We prefer it too, because large balances can be hard for us to collect. Now let's compare employer payroll withholding to Wisconsin's pass-through withholding. Pass-through withholding is like payroll withholding for certain businesses. It's for businesses that are pass-through entities, organized as partnerships, S corporations, and trusts and estates. What makes these entities special is they pass through their profits to their owners. In other words, it's the owners who must pay the federal and state income taxes. Who are these owners? Ultimately, folks like you and me, real people. But here as owners of pass-through entities, they're called partners, shareholders, or beneficiaries. However, there is sometimes a problem. When the owners get these paper profits, they might not also get any actual cash to pay those taxes. This can cause a real financial hardship for owners, getting taxable income, which they must include in their income tax returns, but no cash to pay the tax. Many of these owners are not Wisconsin residents. Because profits earned in Wisconsin have been passed through to them, even if they don't live in Wisconsin, it's likely they must file Wisconsin income tax returns and pay Wisconsin income taxes. Having non-residents who owe Wisconsin tax but can't afford to pay us can be a particularly difficult challenge here at Wisconsin Department of Revenue, often much harder than collecting from Wisconsin residents. Here's where withholding comes in. Remember, employer withholding minimizes employees having large balances due. Similarly, pass-through withholding minimizes non-resident owners from having large balances due because, as these pass-through entities earn profits each quarter, they pay us cash on their owners' behalf. The non-resident owners then claim the pass-through withholding on their Wisconsin income tax returns to avoid having large balances due. Let's summarize what we've discussed so far. Pass-through entities are businesses such as S corporations and partnerships and trusts and estates. Their owners are called shareholders, partners, or beneficiaries, but ultimately are people. Just as employer payroll withholding helps workers avoid large tax bills because their employer has been deducting these taxes from their employee payroll checks, pass-through withholding helps non-resident owners of pass-through entities avoid having to personally pay Wisconsin large amounts from their own funds for taxes on those profits, because the pass-through entity pays Wisconsin the cash for those taxes. Because it can be challenging for us to collect taxes from people who are non-residents, pass-through withholding reduces the likelihood we have this problem. We hope you now have a better understanding of pass-through withholding in Wisconsin. Thanks for watching.